Hey folks, Dan Frio here. TGIF. It is July 16th, 2021. We're going to come back. The old word inflation's coming back. And is it transitory or not? That's the question. So don't go away. We'll be right back. Okay, the buzzword today again, inflation. So the debate right now is transitory. Is it transitory or is it not? The Fed says it is. What that means is it's going to kind of, let's say this word, it's going to peter out. I mean, basically, because what they're saying is between the forbearances, the student loan deferrals, excess benefits, and so forth, people have excess money. Okay, that's the facts. If you don't have a mortgage payment, which over 2 million people are in forbearance, you don't have student loan payments, those two alone are saving people money. Okay, that's fact. All right, so that's that part of it. But what happens is all of these benefits, and the student loan thing just came out, they might extend it even further, but the forbearances are ending between July and September. They're all going to end. So that means over 2 million people are now going to have to start making their mortgage payments again. Some people are saying the housing market's going to crash. I don't think so, because they don't have to make up those payments. There's exit strategies, and we can help you with those. So I think it's going to be transitory, but let's see what happened today in the news, and then let's see what's happening in mortgage rates. So if you go to any news station that you have, and I try to be biased here, or unbiased, CNBC says Dow falls more than 200 points, headed for losing week, inflation fears. Okay, so then you go to Yahoo, global markets, bond yields, stock slide is inflation worries. Okay, inflation worries. All right, so let's dig into that. Well, we know there's inflation because on Tuesday and Wednesday, we had a lot of indicators come out, the PPI, the CPI, and everything else, that there is inflation. All right. But what's happening is, and let me explain my point of view. Again, we have forbearances. Over 2 million people don't have to make their mortgage payment. They can suspend those. Same thing with student loan payments. So let's say the average house payment's $2,000 and the average student loan payment's $500. There's $2,500 a month out of your budget. That's usually half of your budget that you don't have to pay. So that money is being what? It's being spent in most cases. We're a society of spenders. We don't save a lot. But 70% of the last stimulus check went into savings. And that was a study that has been proven and shown. Okay, so that means they're spending as much as they can to a point, but they still have more money. So what are they doing with it? That's what's driving up the stock market. And you got a lot of people also buying properties or real estate with cash, more than I've ever seen in my whole career in this. And I've been doing it for 33 years. All right. So then we also looked into, so we know inflation's here. So then the next thing is the employment numbers. Employment numbers were right on target, what we expected. So that's not the big concern. What we need is employment to spike back up, meaning more and more. There's over 9.2 million job openings. Today, there was nothing really out there other than retail sales numbers, and they actually came in really good. Okay, so everything's looking up there. So where should we be with rates? Or let's see what this is doing in regards to mortgage rates, the big headlines for all the fear. Well, let me clean this because I was just doing a presentation for a client. So let's clean up the chart. And so here's what's going on. We follow this, or people follow my channel on a daily basis because they want to know what's going on with mortgage rates. So I tune them into what's going on with the mortgage-backed security market, not the 10-year Treasury, not the S&P 500, not even what the Federal Reserve is doing with the federal funds rate. Why do we focus on this? It's the biggest component of your mortgage rate. This right here. Exclude everything else. If we follow this is what's going to make the change in your mortgage rate up or down and be the biggest component of that. All right. So this is the price of what's going on with this mortgage-backed security bond. As the price in this case goes down, there's an inverse relationship. That means rates are going up. All right. So let me explain this a little bit more to you. We need at least usually a 0.1 or 0.125 adjustment here for rates to really change. But this will also give me a direction on what the market's doing. And I'm going to explain the 0.125 to you in a minute. But right now, here's what happens in the last quarter. We had a run up to the Federal Reserve meeting in May. And then inflation news and all the buzzword and all of social media and mainstream media came, oh, inflation's going to go crazy and everything's going to collapse. So then we had a drop down And prices and mortgage rates went up. Again, when this goes down, rates go up. When this goes up, rates go down. And then everybody started talking. The Federal Reserve came out and spoke, and everybody calmed the markets, and we came back. All right. And then last month in June, it happened again. There's inflation. The Federal Reserve's coming out, and everybody's freaking. We had a crash in the market. Federal Chairman Powell came out and spoke. He even spoke yesterday and did a fantastic job. Look where we are right here. And I'll go over this in more detail with you. But then we had a nice little run in the market. Okay. So that's where we are. We were overbought at this point, and I even told people I think we should be on a top end at 103.8 right here, and our bottom end should be right here, and I'll explain why to you in a minute. Okay, so that's the trends of what's going on right now. There was no news today, as we showed here, that really affected the market. What happened today throughout the day? Well, we kind of look at this green candlestick here and the red candlestick here. Huge trading volume took place in those time frames. But these are going to wash out each other. So basically today was pretty stagnant. All right. So let me explain though rates to you in a second, and then we'll also go over rates. Rates are on our end of the equation in eighths. So, and this is going to play a role in all this and make sense to you. When we post a rate, or when we do a rate for you, we do rates in normally 99% of our loans are in eighths. So it's 3, 3.125, 3.25, 3.375, 3.5, and so forth. So remember that. Let's go back to our charts here. All right. So remember I said we need at least a 0.1 or 0.125 in this to really make any changes to rates. So let's go over to our rates for today. So these are rates posted by Black Knight today. And they survey the whole country and where lenders are with their 30-year rates on conforming, jumbo, FHA, and VA. Okay, so we send in all of our numbers, and they compile it and divide it by the number of people that post and so forth. This is an average, so they're not equating out in eighths. Okay, but again, this rate would truly be probably 3.125, 3.125, 3.125, 2.875 or 2.75 or whatever, however you want to do that. Okay. So just to let you know, you're not going to get a rate at 3.09. They go in eighths. And again, that's going to play a role over here, and I'll show you in a second. So the 1 day delta, 7 day delta, delta means change. So the change in the last day is 3 basis points. That equates out to 0.03. All right. So you can see how that's not going to change this, because that rate anyways would be 3 or 3.125. So if the lender elected to round up, they went 3.125. If they elected to go down, they're at 3. So the 3 basis points or 3/100th isn't going to make a difference. Okay, what's making a difference is when you get to the 4-week or the 1 month time frame, you're going to see all those numbers have changed. In almost every case, it was more than 0.125. Okay, so again, remember the 0.125. That will play a role. So if you're getting a loan estimate or you're getting a quote from us, your rate's going to be in increments of eighths. So hopefully that explains to you. We had a nice little dip. Look over here. We have nice little dips, but we have nice stability in the markets over the last couple months. That's what we like. It's when you go from here, look at this rate right here. It's probably 2.7 all the way up to 3.4, 70 basis point jump. That's quick. That's big and quick. And that starts to freak out people. So that is my rate update for today. I'm going to leave it at there. TGIF for you guys. If you're out there looking for a mortgage and you need help, you're looking to build a house, you're looking to buy a house, you're looking to refinance, or you're in forbearance, please reach out to us and let us help you. How do you find out more about me and my team? Great question. We just launched a brand new website. You can go to therateupdate.com. Here it is. We added features every day. So you can go through here. What we just added today is all my reviews. And we have reviews that are posted here. So if you want to check out any reviews, you're more than welcome to do that. But if you're looking for some help from us, please give us a call. There's multiple ways to get in touch with us. You can call 844-775-LOAN. It's our number right here. You can reach a mortgage consultant almost every day at all times, because this goes out to all of our cell phones. If you want to schedule an appointment, let's say it's on Sunday, or you finally watch this video and it's midnight, and you're like, man, I could really use Dan's help. What can I do? Schedule an appointment. We're getting about 10 of these a day. It's increasing dramatically, which is really cool. You can set up a 15, 30, or 60-minute consultation. You just click it. It'll launch you right to my available days and times, and you set up an appointment. We will do it by phone or by Zoom, whatever easier for you. And then the rest of this website, there is a ton of great data here for you to go through, check out reviews, check out programs and everything else that you might want to see. And then at the bottom, we just added a blog page. So you can click that and check out some blogs that we've been posting. And one of the coolest parts of this website that I like also is the resource page. If you found me on YouTube, you can go there and check out all my YouTube channels right here, The Rate Update. There's over 900 videos here. I hope you enjoy. Other than that, have a great weekend. I'll see you Monday, God willing, and just enjoy life. Take care, guys. I'll talk to you soon. Bye-bye.